Australia's largest builder starts a $65 million fire sale. Today, we're going to walk through everything you need to know about the building industry, what we're seeing, the troubles they're facing, and things to be keeping in mind if you are considering building. So let's dive in and have a look from the top, starting off with this article we've recently seen, talking about a builder that is starting to go through a 65 million fire sale of their display homes. None other than Australia's biggest builder, Metricon. They've got 56 display homes worth about $65 million that they're putting for sale. Now, the acting CEO, Peter Langfelder, is actually saying that it's a normal part of the business cycle. We're going to run through a little bit later what we're seeing in the building industry and things and troubling trends that we're starting to see to keep in mind if you are considering building this year. These properties are based in Victoria, New South Wales, Queensland, and South Australia. Now, the prices for these display homes start anywhere from $650,000 right up to $3.2 million. Now, it goes on to talk about that the building giant Metricon has listed 56 display homes worth about $65 million for sale, despite reports that the company is struggling to stay afloat. And we've heard these similar whispers around town, and I'm going to talk about the building model that these guys have used for so long and how the recent changes with inflation, skyrocketing costs, and all that plays into the woes that we're sort of seeing. So stay tuned. I'm going to run through that in a sec. I just wanted to cover a few things in this early report just to give you a bit of a background. So with the sale, the homes are based in Victoria, New South Wales, Queensland, and South Australia. They're ranging from 650 to 3.2 million, as we talked about earlier. And there's also some sale of assets in Mooloolaba and Surfers Paradise worth about $17 million collectively. It goes on to talk about the cheapest property is in South Albury-Wodonga for $650,000. And then it also talks about the most expensive being at the $3.2 million. I wanted to go through this section here, and then I was going to talk more about what the challenges we're seeing with the builders at the minute. So it does talk about 2/3 of the home listed will actually be leased back. So there'll be an arrangement where there'll be a lease back arrangement with Metricon, whereby the owner will get paid up to 8%, which is a pretty good return for a display home. That seems to be the going rate. We have seen a few customers that have bought display homes in the past, and they do seem to get a very decent return on investment because they're usually a short-term lease. Now, Metricon's financial stability has actually been under intense scrutiny. Earlier in the year, Commonwealth Bank was looking into, I guess, must be renewing some of their agreements. And the bank actually agreed to some sort of a rescue deal in May. Metricon's acting executive, Peter Langfelder, has said that the company's owners would also give $30 million to help in what I can only assume prop up the business. And in May, there's actually some reports that the staff were told to increase the deposits they're getting from customers to help the cash flow of the business. So I guess that's pretty troubling. Now, it also goes on in here to talk about that Metricon employs 2,500 people, and they were actually ranked Australia's biggest builder in 2021. And the acting CEO says this is a very normal part of the cycle. Now, I did want to talk about what we're seeing in the building industry and some of the troubles these guys are really facing. And I think the first one is the fixed price tender. Now, we saw when COVID first hit, there's a lot of builders that were locked into these fixed price contracts. I've got the QBCC up, so they're the Queensland Building and Construction Commission. They give guidelines on what needs to happen with builders and how they need to operate. And the main thing is that a lot of consumer, so residential properties, are done through what we call a fixed price building contract. So a fixed price building contract is effectively where the building agreement is signed and the prices are locked in at that stage whereby they're not going to change. So for example, if you're building a house, you don't want any nasty surprises halfway through to find out that you actually can't complete the build because the costs are blown out. So a fixed price contract gives the owner peace of mind that they know what they're up for, and gives the builder confidence that they've locked in the contract and they know they've got a customer that they can assist. Now, what was great previously was the build costs didn't really change too much. So really in the last 10 or 12 years, the costs fundamentally hadn't been increasing all that much. So big builders like Metricon could sort of go out and tender and have thousands of homes that they're building. And it does say here that they have thousands of projects on the books at any one time, and they could compete on margin. So they work on really razor thin margins, knowing that they can pick up, timber at wholesale rates. If they're doing thousands of projects, they can buy it in bulk and make money on really the razor thin margins across the board. Now, the trouble we've seen with the supply chain issues is the costs have increased something chronic, like insane increases on the costs. So builders that have locked themselves into these fixed price contracts, we saw 18 months ago, they were actually throwing money. I saw up to 30 grand that these builders were throwing at their people that have locked themselves into the contract. So they were trying to give the consumers 30 grand to get out of the contract because they knew they were going to lose big money on these fixed price contracts that they'd locked in before they had all these supply chain issues. Now, this has been causing massive issues across the industry. We've seen builder after builder go broke, and it's mainly because of the problems that these builders have had with their costing and the fact that they've been locked into these fixed price building contracts. We saw ProBuild go under as well. We've seen Honto, we've seen builders across the country needing to liquidate because of the fact that they've locked themselves into these contracts, which traditionally used to work quite well. However, with these supply chain issues have really caused us, we've seen some of our clients being affected by this as well, where the builders are partway through a build and have actually run out of money. One of the good things that the banks do is they pay the progress payments in arrears. So for example, there's usually 5 stages to a build. So, let's say, for example, the first stage, you've got the slab down, the second stage, you might have the frame up, and so on and so forth. The bank usually doesn't pay the builder until the slab's down, and then the next payment is paid. So that usually protects consumers in the event that the builder does go broke. The bank hasn't foregone any cash out of pocket for works that haven't been completed, but it is really challenging out there for those looking to build for these reasons, especially because the builders are struggling. They need to lock into these fixed price contracts, but because the costs are changing so frequently and so quickly, it's hard for them to really gauge. And even to the point where we're seeing some builders not even offering to do fixed price contracts because they can't guarantee that their fixed price contract they do today is actually going to be the same as when they start in 6 months' time, because those costs keep increasing. So yeah, it is really a bit of a challenge out there at the moment. I guess going back to the article here, it does talk about the fact that in December quarter of 2021, there's 328 construction companies that went into administration. Now, when we compare that to another industry, such as food and accommodation sector, they only had 178 in comparison. So we can see that this is going to be a huge issue for building in the short term, especially as we see inflation really take bite in this sort of every aspect of a build is being affected by that. And we're seeing the builders are really struggling at the moment, which makes it a bit of a shame to see. So that's it for today, guys. If you have any questions, hit us up at huntergalloway.com.au. Did you know here at Hunter Galloway, we're mortgage brokers. We're based in Brisbane. We deal with people Australia-wide. So if you're living in Sydney, you're living in Perth, you're in Adelaide, we can certainly help. There's no cost for the service. We help home buyers, investors, people looking to refinance or release equity. Hit us up at huntergalloway.com.au or call us on 1300 088 065, and we'll see you next time.